A very warm welcome to IDFC First Bank presents Leaders of Tomorrow Season 13. I'm Ritvika Gupta. Now, India's commercial real estate market is at a critical inflection point shaped by rapid expansion of GCCs, shifting workplace expectations, large-scale infrastructure upgrades, and evolving demand from both MNCs and MSMEs. Real estate decisions today have long-term implications for business growth. And to decode the forces driving demand across India's commercial real estate landscape, I'll be in conversation tonight with Ramesh Nair, CEO and MD Mindspace REIT. Ramesh, welcome to ET Now, Leaders of Tomorrow. It's a pleasure to be chatting with you today.
Thanks, Ritika.
So I want to start with the big picture. As we have just stepped into 2026, how do you read the overall momentum, shaping the industry, the, commercial real estate market?
I'll break it into two parts, Ritika. First, the office market and then the REIT market. The office market has been doing exceptionally well. Every quarter, I see phenomenal results in terms of absorption. 4 years back, office absorption used to be 25 million square feet. This year, it's going to be 55 million square feet of net absorption. Gross leasing, again, has gone up from around 34 million square feet to around 75 million square feet. Vacancy levels dropping from around 18% to around 14%. It's the lowest vacancy we've seen in the last 18 quarters. So all numbers looking good. From a REIT point of view, today we have just 165 million square feet of office space under REITs. The total REITable assets are close to 500 million square feet. So that's the opportunity. Various policy reforms have definitely helped us, whether it's the SEZ reforms from the government, whether it's a reclassification of REITs as equity. The government SEBI has done a fantastic job of just creating this instrument. A few years back, REITs was just an experiment. Yeah. Today, it's an established asset class. There is credible sponsors, credible REIT managers who have given returns. There's a good track record of these returns. And from a HNI retail point of view, today, if someone is looking at investing in an instrument which has the returns of commercial real estate, which has the liquidity of the stock markets, which offers diversification of mutual funds and governance of a listed company, I think the right product is the REIT.
Fantastic. Ramesh, GCCs are also contributing to about 54% of your portfolio. Just help me understand, how are GCCs, driving this demand and which sectors particularly are powering this growth?
So GCCs, today around 40% of the leasing in the country is GCCs. There are around 1,950 GCCs in the country who occupy around 290 million square feet. This 290 million square feet over the next 4-5 years is expected to go to around 550 million square feet. I was just looking at the numbers of how IT services have been growing and how GCCs have been growing over the last 4-5 years. IT services have been growing at around the 7 to 8% mark, while GCCs are growing at around the 18% mark. Today, a company looking at outsourcing, offshoring work to India have 3-4 different models. They can look at a captive, which is a GCC. They can look at outsourcing to a large Indian IT services company. They could look at a joint venture. They could look at a build, operate, transfer. What we have seen is in the last few years, the share of IT services has dropped a little bit, and it's been captured by the GCC market. Another big trend I've seen is whenever there's a black swan event, like we saw after the dot-com bubble bust in 2001-2, like we saw after the GFC 2008-9, and after COVID 2020-2021, there's always the Indian GCC market kind of goes up. So that's definitely a trend we have seen. IT services kind of subdues a little bit, and GCC kind of goes up. We've seen it 3 times around over the last 25 years.
Right. So as far as office spaces are concerned, what are GCCs asking for? What are they looking out for, according to you?
So today, GCCs have a long list of requirements. It's a global capability center, which means they're looking at global governance standards. They're looking at global infrastructure standards. Now, look at a building like this. This could be the best building in New York or London.
Yeah.
They want that kind of facilities. Today, a lot of our clients come back to us. They want a lot more F&Bs. They want a lot more amenities. They want a lot more wellness features. Post-COVID, the demand for touchless features, a lot more questions being today asked about what's the indoor air purification which people can give. Multiple things. Today, look at your occupier. A lot of his workforce are between the 25 to 40. They are looking at more green spaces. They are looking at more campuses. They are looking at low-rise, breathable buildings. So that are some of the things which, more than anything else, today GCCs are also looking for institutional landlords they can partner with, and that's where platforms like Mindspace REIT can definitely play a role of accommodating these requirements of GCCs.
Absolutely. Ramesh, tell me, when you go to different markets, what are the patterns are you seeing, the rental patterns are you seeing? And I'm asking, from the point of view of a MSME or a growth stage company, what should they look out for when signing up for a long-term lease?
So from a rental growth point of view, it's different markets behave differently, different micro markets behave differently. If you look at a countrywide number, the last 1 year we've seen rentals go up 7%. In 2026, I was looking at some of the IPC reports, which says that rentals could go up around 8 to 9%. Overall, since listing, our NOI, which is the net operating income, has gone up incidentally 13%, much more than where the market is. That's also because we have had the benefit of mark to market. So when a tenant leaves, we have leased it at between 25 to 30% more than what the tenant was already paying. From an occupier point of view, my recommendation would be they should look at 5 to 6 different things. Most important being talent availability, second being talent cost, third is real estate availability, fourth is real estate cost, fifth is physical infrastructure, and sixth is social infrastructure. One clear trend I've seen in the last 2-3 years is physical infrastructure. Cities which have, or micro markets which have good physical infrastructure, are growing, rentals are growing much faster than other parts of the city. A good example is the Hyderabad Madhapur market, where fantastic physical infrastructure. In the night when you drive around, it doesn't feel like you're in India. And what I've seen there in the last 1 year is rentals have gone up 15 to 20%. Again, look at a market like Navi Mumbai. What we are seeing is, because of what the Fadnavis government has done, massive investments in infrastructure, whether it's the Atal Setu, the new airport which is coming up, the various metros in the city, we're suddenly seeing rentals go up there again. So a lot of rentals is today to do with the infrastructure which a city or the micro market gives.
Right, and just picking up from what you said, India is going through a major infrastructural transformation, with your, corridors and your highways and your airports being rebuilt and, reimagined. Tell me, how do you think this will really, impact, say, your rental pricing in terms of the kind of profiles that come to you in terms of occupancy levels going forward?
Look at a portfolio like ours. Around 50% is, like you said, GCCs. Around 20% is IT services, and around 30% is domestic companies. One thing what we've seen is a lot of Indian domestic corporations who were previously okay being in a grade B kind of space, today are saying, I want to be in the best spaces. They want to attract the best global talent. Previously, a lot of Indian companies would say that I want to own space. The same companies today are saying, I want to kind of lease that space. That's another big trend we are seeing. Okay. Overall, the number of commercial institutional owners who have more than one city, like a multi-city presence, that number is only 15. We are probably one of the biggest in that list of 15 along with our sponsor, which again people are saying, I want to be in these kind of spaces. We're lucky to have a great sponsor who's been in the business for the last 6 decades, known for governance, known for execution. That's what today a lot of clients are looking at. The institutionalization continues, the premiumization continues, and we are big beneficiaries of that.
Right. Are you seeing a shift in demand from, say, your MNC clients to maybe now more domestic enterprises, MSMEs, coming up and, availing these commercial spaces?
It's a good mix, Ritvika. So offices, if you look at the last 15, 20-year average, American companies have taken 40 to 50% of leasing space in India. There have been years where American companies have leased more space in India than Indian companies. So that's in line with our portfolio also. Let's look at a 20-year average. For the first 15 years, from 2005 to 2020, the average annual net office absorption was around 32 million square feet. During COVID, obviously, it dropped to around 24 million square feet. This 32 million square feet of average, post-COVID, has today jumped to 46 million square feet. So we are clearly seeing a big market shift, and this market shift wouldn't have been possible if large domestic Indian companies and mid-sized companies didn't insist on being in better quality spaces. Today, companies want their employees to be happy. They want their employees to be productive. They want spaces where their employees can learn, socialize, and connect. And that's where they're moving towards the grade A spaces. And that's why you're seeing those massive demand for net absorption, which is happening in the country, which is also leading to record quarters every quarter.
It's time for a quick break here. We'll be back shortly. Stay tuned. Welcome back to IDFC First Bank presents Leaders of Tomorrow Season 13. Tonight, we are putting a spotlight on India's commercial real estate landscape. What does 2026 hold for the sector, and how can businesses align their strategy with ambition and Ascent? In conversation tonight with Ramesh Nair, CEO and MD, Mindspace REIT. The theme for our show this season is agility, ambition, ascent. And the reason why we kept the theme is because 2025 was quite a disruptive year, when it comes to tariffs, when it comes to macroeconomic volatility, geopolitical tensions. How do you see 2026 shaping up, and how do you think this will influence the commercial real estate market?
So from a tariff point of view, Ritvika, what we have seen is, till now the tariffs have only been on goods. There's not been on services. We've still seen the services within the GDP bucket go up. India has done well on the services side. Overall, what we have seen is whenever many US companies, what we have met, because of some of these tariff impact on them, their cost of production has gone up. They feel having a GCC today can help them hedge against some of those global trade volatilities.
Okay.
So it's kind of helping India. I spoke about how some of those black swan events like a COVID post that demand goes up again in markets like India. Overall, we are saying even if tomorrow, let's say there is tariff on services, the cost of setting up a 1,000-seater in India, a global capability center in India, versus that in the US, we are talking of 1/4 the cost. So it's just 25%. On this 25%, you add a little bit of tariff. India will still remain overall cost competitive. There are other countries like Mexico or a Costa Rica or a Poland or a Philippines. These countries are good, but when you compare it to India, from a STEM talent point of view, the depth of talent we have in STEM, the quality of infrastructure available in India, the quality of talent available, not just the quantum. We all know that the close to 8 million graduates who pass out of India every year, which kind of gives India a multi-year labor supply pool, given that today the average age of the talent is only 29. Many of these countries may not have the kind of regulatory policy reforms which India has done. So this India's growth story from being the world's office, like China as the world's factory, will continue for a while.
Fantastic. Ramesh, the definition of an office, of a workplace has really changed, in the last decade or so. Now an office means, like an integrated park, with amenities, retail presence. Tell me, what does a future-ready workspace look like according to you?
Flight to quality will definitely continue, which means quality buildings will do better. Premiumization will continue. What we are focused on as one of our top 5 strategies is what we call the hotelization initiatives. We call it H23. How do we convert office building to look like a hotel? Ritvika, you've been to all 5-star hotels in this city. Won't you rate a lobby like this better than most 5-star hotels in the city? That's part of it. How do we give small things like a pipe music, a fragrance which people can associate your building with? In the last 1.5 years, we've done more than 90 new F&Bs within our portfolio, because everybody has a different taste. How do we do that? We're putting in a lot more sports facilities. When we did a survey with our clients and asked our clients, what are the top 5 amenities you want? Medical shop came in the top 5. Some of our clients said, we need an emergency medical room. Now, every project of ours today, when we are planning them, we're making sure these kind of amenities are there. So you're catering to, like I said, a global capability center. We need to be ready to provide global infrastructure within these buildings.
Fantastic. Ramesh, the Union Budget 2026 is also around the corner. I would definitely like to know what are your expectations from the upcoming budget, and also what are some of the policy reforms, is the industry asking for right now?
This government, Ritvika, has done a fantastic job over the years in terms of just supporting the commercial and the REIT sector. Let's name a few. 3 years back, if you had wanted to buy a REIT unit, the minimum you had to pay was a 2 lakh rupee to trade a lot. Today, you can buy 1 unit. Okay. That's the government's big reform which they did. Second big thing the government did was also the REIT reclassification. Today, a REIT is classified as an equity product. That's definitely helping. SEZ demarcation. This government brought in these rules early last year, wherein SEZ floors could be converted into non-AC, demarcated into non-SEZ. So that's again a big reform which the government has done. What are 3-4 things I think which which the government could do in the budget? One is today the banks can lend to SPVs. Maybe banks could be allowed to lend directly to the REITs. That's something we could look at. Secondly, increasing the overall quantum of investments, the limits which mutual funds have, which insurance companies have. If those limits can be increased, I think that'll be great. Input tax credit today, which is given on sale of properties, if those benefits can be given for commercial leasing, I think that's something which should again help. Also, if the government can encourage provident funds to increase their allocation towards REITs, that would again help the sector. So these are some of the things which could overall help the sector.
So Ramesh, our show is called Leaders of Tomorrow, and I want to know what does leadership mean to you, and perhaps how have you evolved as a leader over the years?
2-3 things which I try and keep in my mind. How do we create teams which is focused not just on high performance but also on high values. The world which we live in, the VUCA world, how do you make your team members comfortable being uncomfortable? Because every year there's some new challenges. This year everyone is talking of 2025, everyone is talking of tariffs. Previously there was wars, there was COVID. Every year, how do you become as a leader How do you lead teams, make your team comfortable and make yourself comfortable being uncomfortable? Obviously, also try and see if you can create that psychological safety where people can make mistakes, where people feel their ideas are heard, their voice is heard, and if they do something wrong, the leader kind of helps them correct it and move forward. So try and keep some of these things in mind. There's, I think, the best use of a leader's time is to motivate their team members. So and how can you constantly keep increasing your client relations, your overall your network? These are some of the things I try and keep in mind.
Wonderful. And Ramesh, as we are finally wrapping up this conversation, this very wonderful conversation, tell me, what's your outlook for the new year, for 2026? What are the trends? What are the risks perhaps, should entrepreneurs watch out for? What can you tell us?
The outlook for our industry is quite optimistic, Ritvika. So I was looking at the lead indicators. What are the lead indicators for a commercial real estate industry? First is GDP growth. Second is the services side of the GDP growth. FDI in the country, FDI in services, PE investments, VC investments, the total number of RFPs in the market today, the total number of enquiries in the market, overall interest rates, all this is today pointing towards a good 2026. Other aspects, from when you look at it from an investor's point of view, I believe this year there would be a lot more investment action, lot more active acquirers in the market, lot more active divestors in the market, which also means that cap rates would become lesser. We would also see overall return expectations become lesser. From an overall investor sentiment point of view, and this is for all asset classes, not just commercial real estate. It could be the same for the stock markets. The various investor sentiments, from a hope, relief, optimism, excitement, enthusiasm and euphoria, I think we are somewhere between the optimism and excitement point of view, with little more to go from a euphoria point of view. So I think overall everything looking on track for the commercial real estate market for 2026.
Fantastic. It was lovely chatting with you, Ramesh. Thank you so much for being on Leaders of Tomorrow.
Thanks, Ritika. Thanks for having me.
Thank you. And with that, it's a wrap on this edition of IDFC First Bank Presents Leaders of Tomorrow Season 13. We hope you enjoyed the episode. Thank you for watching. Goodbye.